So let's start with the trading ideas which got triggered on the 18th of December, which was the day where we had a key event, which was the election results for Gujarat. So let's start with the trades which got triggered on that day. The very first one was Cipla, right? And we planned Cipla on 17th of December. So Cipla was planned on 17th of December. We got the entry for it on 18th of December. So this was a daily income trade. If I go to the daily chart, you can see we planned a trade to go short on Cipla. Right, we had this supply zone, which was rally-based drop, drop-based drop, a case of level on top of level. Now, if you look at the arrival, you can see prices, and then prices came into our zone, right? So basically, we had this opposing drop, base, rally as our target, which is my nearest and fresh demand. So if you talk about your target, the chart was definitely showing you a reward to risk ratio which was more than 2:1. So this was a valid trade for us and could have been traded for 2:1. But what happened was prices, they went up and the zone was violated and you would have got stopped out on this trade. Now, this is based on somebody who trades everything, right? But if you were applying any of the rules, which is where we discussed that when it comes to the days when volatility can be there, we should be avoiding, locations which are not the best locations. So this one was not very high in the curve. This one was high in the curve. Could have been done as type 2, type 3 trade where probably you would have not got stopped out. But I'll mark it as a stopped out trade. Reason being, everything was picture perfect. Arrival was amazing. Everything was good. Could have been traded, but would have resulted in a stopped out trade. So this one, like I said, would have been a stopped out trade. But yes, if you were using any of these rules, because we knew that this is a day where we have some key events happening, then probably maybe you would have not traded or maybe you would have been safe. But for me, a stopped out trade. The next trade which got triggered was Hindustan Unilever. If you talk about Hindustan Unilever, we planned it again on 17th of December, got triggered on 18th. Right, so Hindustan Unilever, we wanted to go long. And when we planned this trade, if you remember, we discussed the reward to risk ratio was not a challenge. So because we didn't have that reward, that move, this was a type 2 or a type 3 trade for us. And as a type 2, type 3 trader, you can see the very first candle prices, the move down and the zone would have been violated. So this was not a valid trade. I wouldn't say it was not a valid trade. It was a valid trade as type 2, type 3. But you would have not got your opportunity to trade it as a type 2 or a type 3 trade. Reason being, the very first 5 minutes candle violated the zone, and once the zone is violated, it is no longer a valid trade for us. The next trade which got triggered was HDFC Bank. Now, this was a trade which we planned on 10th of December, and this was a monthly income trade for us, right? So this was a monthly income trade. And here you can see that, prices, they gap down. And again, if you talk about your target before the prices, they came to the zone. So can you see this is where we were, and then prices, they gap down. So before the prices came to the zone, this is where we have our drop, base drop, right? Which means this could have been our target. And the chart was showing us a really nice and clean reward to risk ratio of probably 5:1, right? So this is 3:1. This is where we'd be having 4:1. This was 5:1. So this could have definitely been traded. Reason being, amazing arrival, a very good reward to risk ratio, right? And I've told you many times that whenever the chart shows you much more than what we generally trade for, you should always be waiting for those bigger targets. And if I show you on that smaller time frame, you can see in about just very few candles. So can you see we opened? Prices, they hit the entry, and within the 30 minutes you got your 5:1. So even though it was a monthly income trade where we were expecting that it might take a few months for the prices to give us our target, but because of that volatility, we got our target in about first 15 minutes, the next 15 minutes, half an hour, right? And I would also add here is that, people believe that volatility is our enemy, right? Because when volatility starts coming into the market, we easily get stopped out. Volatility is not our enemy. volatility is our friend, right? Why volatility is our friend? Because of volatility, prices can come to our zones really, really quickly, and they can also go to our targets very, very fast, right? Which is where, a trade which otherwise would have taken, let's say, 10 days for the prices to come to the zone and another 5 days, let's say, for it to hit the target. The same thing happened in about half an hour. So that is how volatility is your friend, not your enemy. So this one would have given you 5:1, right? Was a monthly income trade, anyhow could have been traded. So that is what we planned. If you look at the daily chart, and like I said, this was planned on the 10th of December, and we got the fill on 18th. So after 8 days, we got the entry. So we were looking at this pro gap. So amazing trade. Just hit the zone, touched it, and started moving back. So that's your HDFC Bank. The next one is Bharat Forge. Very unfortunately, we missed it by just 5 paise. Bharat Forge. Right, so if you look at this was again a weekly income trade for us, which means my zone was from the hourly chart, and here you can see almost a similar kind of a picture. Prices, they gap down. If I just go to a 5 minutes chart, you can see prices, they gap down, just came to the zone. We missed it by 5 paise, and then an amazing move. This was also showing us a reward to risk ratio, which was almost 5:1. So this was also a 5:1 trade. Fortunately, we only got HDFC. This one we missed by 5 paise, and we were not able to capture this. Otherwise, we would have got 2 trades in one single day, which would have given you a reward to risk ratio of 5:1. But we were only able to get into one because the other one was missed by 5 paise. So that's Bharat Forge, which was missed by 5 paise. But after that, amazing move in about, again, half an hour, because now I'm on a 5 minutes chart. So 5, 10, 15, 20, 25, 30, 35, 40, 45, 50. Right, in about an hour, this would have also given you an RR, which was 5:1, provided we got the entry, but we missed it by 5 paise. The next one is Adani Ports, which was an hourly income trade. Right, and all these trades, they got triggered on 18th, which was the election result day. So this was an hourly income trade, and here you can see that we planned it long time back. This trade was planned on 26th of November, right? We planned it on 26th of November. It came back to the zone on the 18th of December. So after a very long time, it came back to the zone. And here you can see the RR was not really nice and clean. We were having a little less than 1.5, because this base rally would have been the target, because that is where we got the fill. So before the fill, this was our nearest and fresh demand area, base rally, which was showing us a reward to risk ratio, which was about 1.5. Because of this, this should have been avoided. But if you look at the zone was still respected, and we were not stopped out by 5 paise on this one. So prices came deeper into the zone, but just by 5 paise, we were not stopped out. And I will also show you something very interesting here. Most of the times, people, they believe that your stop loss has to be very big. If your stop losses are small, you can easily get stopped out. Here you can see when we planned this trade on a 400 rupee script, our stop loss was just 1 rupee 10 paise, which is around 0.27%. So can you see, you can take trades with very small stop losses. Can you see on a 400 rupee script, our stop loss was just about 1 rupee 10 paise. And still we were not stopped out by 5 paise. It started turning back. In fact, went to 3:1. If you look at it as of now, even bigger move. Right. So this is what I wanted to tell you, that don't go with emotions. Just because at times you're marking zones and the zones are very narrow does not mean you will get stopped out. Yes, even though this trade got disqualified based on the RR, but still the zone was not violated. And can you see, this was on a day when the markets were very volatile. Still a 5-minute zone holded the prices, and didn't let the prices go up and started coming down. So that's the reason I was saying that once you start getting good with your identification of demand areas and supply areas, doesn't matter whether it is hourly income trade, daily income trade, weekly or monthly, you can do all styles of trading, because you have experience, your eyes are trained to identify quality, which is where even a 5-minute zone can hold for you, even if the markets are getting very volatile, right? But this one, I would say no trade. Reason being, RR was not there. And the other one which got triggered was Idea. So if you look at idea, here you can see that when the prices they started coming back. Now this was a trade which we planned on 12th of December, and this was a daily income trade for us, right? And here you can see when the prices they started coming back, we had this rally, base rally, which was showing us a reward to risk ratio at about 1.5, which is where, I have told you many times that if you see 1.5, you can still trade it because possibility is high. You will get your opportunity to make it break even. You can have multiple targets, or maybe you can try to take a deeper entry, right? So if you would have taken a deeper entry, by the end of the day, you would have got your 2:1. If you would have, taken two different targets, because it is a short trade and shorts in stocks cannot be kept overnight, that then at the end of the day, probably you would have made close to 1:1 and closed this position at 1:1. But the next day again, prices just started moving down and would have given you the target, which is 2:1. But the chart was only showing us an RR which was at around 1.5, right? So yes, if you kept it overnight, you would have got 2:1. If you were doing it as a stock trade, you would have made close to 1, right? So these were the five trades out of six trades, right? Out of which five got triggered, and one we missed by 5 paise. So HDFC we got over almost 5:1. Cipla we got stopped out. Hindustan Unilever was not a valid, I would say, was not a valid trade based on. I mean, it was a valid trade as a type 2, type 3, but we would have not got our opportunity to participate in it. Bharat Forge, it was a 5:1 trade, but we missed it by 5 paise. Adani Ports gave us 2:1 target, but again, the arrival was telling us it's better to avoid it. And Idea again gave us the target, which it was showing, which was around 1.5, and gave that target as well. So can you see that's the beauty of demand and supply, right? That you can see some of the trades which we planned back in 26th of November got triggered on 18th, and still the zones were respected. So that's the beauty of demand and supply, that you can plan your trades well in advance, and you can try to understand where those turning points will be in the future, right? And can you see how beautifully prices they respect the demand areas and supply areas?